Welcome to XRP Pro Ledger. Today, we need to address something directly before we get into the data. Because right now, as you are watching this, YouTube is flooded with thumbnails claiming the Clarity Act has passed and that the president has signed it into law. Let me be precise about what is actually true. The Clarity Act has not passed, it has not been signed. It is still navigating legislative delays with a Senate markup timeline that has slipped into May and polymarket odds that collapsed from 82% to 50% in a matter of hours earlier this week. Every creator pushing those thumbnails tonight is either misinformed or deliberately manufacturing engagement by telling retail investors what they want to hear rather than what the documented record shows. The retail audience chasing those fake thumbnails is doing exactly what exit liquidity is supposed to do. It is watching the wrong screen, while the institutional accumulation that actually determines long-term price direction happens on a completely different level of the market. Bitwise's XRP ETF alone has quietly accumulated 229 million XRP. Robinhood wallets are holding over 10 billion XRP, and Binance open interest has compressed to near zero. A historically precise precursor to the kind of directional volatility that catches the retail market completely unprepared. Stay with this analysis through to the end, because I am going to walk through the real story that every fake Clarity Act thumbnail is successfully distracting retail investors from. And it involves the Bill and Melinda Gates Foundation, 1.7 billion unbanked people, and a $150 trillion annual cross-border payment market that Ripple's core technology is already routing in production. Let us establish the precise analytical framework for reading the current environment before we address the Gates Foundation infrastructure story. Understanding why retail is so susceptible to the fake Clarity Act narrative requires understanding the psychological dynamic that makes manufactured political news more emotionally compelling than documented operational deployment data. The retail XRP investor base has been waiting for a specific legislative event, Clarity Act passage, as the signal that confirms their investment thesis. That specific waiting creates a vulnerability. Any content that claims the wait is over generates an immediate dopamine response that overrides critical analytical judgment. The creators generating fake Clarity Act thumbnails are not accidentally producing misinformation. They are deliberately targeting the psychological vulnerability of an audience, and they are profiting from that targeting through engagement metrics that reward confirmation bias over factual accuracy. The institutional participants who are accumulating 229 million XRP through Bitwise's ETF and holding 10 billion XRP in Robinhood wallets are not waiting for fake thumbnail confirmations. They are reading operational deployment data, infrastructure partnership records, and on-chain metrics that tell a fundamentally different story from the legislative noise dominating retail attention tonight. The Gates Foundation and Mojaloop story is the institutional infrastructure development that the retail XRP community has been systematically underinformed about. Understanding it precisely requires going back to 2017, when Ripple made a decision that most retail investors have never encountered. In 2017, Ripple integrated its core technology, specifically the Interledger protocol, as the operational routing engine for Mojaloop, an open-source payment system designed to connect 1.7 billion unbanked people globally to the formal financial system. Mojaloop is not a Ripple marketing initiative. It is a live operational payment infrastructure backed by the Bill and Melinda Gates Foundation, the Rockefeller Foundation, Google, and the Monetary Authority of Singapore. Four of the most credible and most financially powerful institutional actors in the global development, finance, and technology sectors simultaneously. The Monetary Authority of Singapore's involvement is specifically significant. MAS is not a philanthropic organization. It is a sovereign financial regulator with a mandate to ensure the stability and integrity of Singapore's financial system. MAS does not attach its institutional credibility to payment infrastructure projects that it has not evaluated for technical robustness and operational reliability at the highest institutional standards. I want to address the specific architecture of what the Interledger protocol does within the Mojaloop infrastructure. Understanding the mechanism is the key to understanding why the $150 trillion cross-border payment market figure is not an aspirational target, but a mathematically grounded liquidity demand calculation. The Interledger protocol is a routing layer that enables payment networks operating on different technical standards and different currency systems to communicate and settle with each other. Within the Mojaloop infrastructure, the Interledger protocol serves as the connector that allows a mobile money account in Kenya to settle a transaction with a bank account in the Philippines without either party needing to understand the other's payment system architecture. XRP's role within this architecture is as the bridge liquidity asset, the neutral value token that the Interledger protocol uses to facilitate exchange between currency systems. This is not a theoretical future application. This is the documented operational function that Ripple's technology is performing within a live payment system backed by the Gates Foundation right now. Stay tuned, because the mathematical implications of this for XRP's required price at global deployment scale are what institutional analysts are modeling. And those implications are what the fake Clarity Act thumbnails are successfully distracting retail investors from processing. The $150 to $182 trillion annual cross-border payment market figure requires precise contextualization. The current infrastructure processing these flows is dominated by SWIFT, a messaging network built in 1973 that routes payment instructions between correspondent banks through a multi-step, multi-day process that requires pre-funded Nostro and Vostro accounts. The $27 trillion trapped in those Nostro and Vostro accounts globally represents the inefficiency tax that the existing infrastructure imposes on the financial system. The Interledger protocol's instant settlement capability eliminates the need for those pre-funded buffers by making real-time bilateral settlement possible. If that capability captures even 1% of the $150 trillion annual flow, the mathematical demand for XRP as the bridge liquidity asset in those transactions represents a figure that the current market capitalization of XRP cannot comfortably accommodate. The institutional accumulation data that is visible in the current market structure provides the quantitative confirmation. Bitwise's XRP ETF, holding 229 million XRP in institutional custody, is the documented, regulated, publicly disclosed record of a major asset management firm making a massive allocation decision. Robinhood wallets, holding over 10 billion XRP, is the platform custody figure that reflects the depth of conviction among the XRP holder base at current prices. Binance open interest compressing to near zero is the derivatives market signal that deserves the most careful analytical attention. When open interest compresses to near zero, it means the leveraged trading community has either liquidated or reduced its XRP positions to minimal levels, a condition that historically precedes the most significant directional moves. Near zero open interest is not a bearish signal. It is the clean slate condition from which sustained directional moves emerge. The fake Clarity Act thumbnail phenomenon actively degrades the quality of information that the XRP community uses to evaluate its thesis. When institutional analysts evaluate a digital asset, they assess the information ecosystem surrounding it. An information ecosystem dominated by fake legislative announcements signals to institutional evaluators that the retail holder base is driven primarily by narrative and sentiment. The Bitwise accumulation of 229 million XRP and the Mojaloop Gates Foundation infrastructure story are the institutional signals that belong at the center of the XRP analytical conversation. The Monetary Authority of Singapore's involvement in the Mojaloop project is the regulatory validation dimension. When MAS commits its institutional participation to a payment infrastructure project, it is making an explicit statement about that infrastructure's compliance with the regulatory standards required for financial system integrity. That endorsement is doing more for institutional confidence in Ripple's underlying technology than any legislative announcement could. The mathematical relationship between the $150 trillion cross-border payment market and XRP's required liquidity at scale is the analytical exercise that institutional analysts are performing. If the Interledger protocol routing XRP processes even a fraction of a percent of the $150 trillion annual flow, the daily transaction volume would require a market depth and a price level substantially above current valuations. The Gates Foundation and Mojaloop deployment is not a speculative future application. It is a live production deployment that is already generating transaction volume. The complete picture that tonight's analysis assembles is one of a profound and deliberate information asymmetry between what retail investors are focused on and what the institutional data is documenting. Retail is watching fake Clarity Act thumbnails. Institutional capital is watching Bitwise accumulate 229 million XRP into regulated ETF custody. Robinhood wallets hold 10 billion XRP, and the Gates Foundation-backed Mojaloop infrastructure continue its deployment toward 1.7 billion unbanked people. The Clarity Act matters for the institutional adoption curve. It does not matter for the Gates Foundation deployment that is already live. The legislative news cycle is the retail attention layer. The operational deployment layer is where the price is actually being determined. The information asymmetry between those two layers is the gap between where XRP trades tonight and where the infrastructure deployment data says it needs to be. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.